Are the stock markets crashing? Hello, ladies and gentlemen, and welcome back to the Daily Show where we talk about stocks, commodities, and cryptos. It was a bad day for tech, and in particular, semiconductors. We've been reporting some serious volumes going through those particular areas, and we've got more of that coming up in today's show. But is the market overbought, and are we about to sell off? Well, according to the Dow, no. We're actually notching another bull green week so far, and it looks like it's on its longest winning streak since 2017. Many analysts out there are changing their opinions all over the time. Some still see as much as 20% decline, although they're still getting more bullish on the market than they were, and semiconductors pop in an island reversal. But what's happening underneath the hood? Is this finally the sell everybody's been looking for? Well, according to the Qs, we should be seeing one based on so many gaps that need to be filled. But more importantly, we now have day 2 of defensive moves. Yes, utilities, healthcare, and staples. They were some of the best. Let's talk about it all now in today's show. Well, welcome back, everybody, to the Daily Show where we talk about markets around the world. We're covering the macro, lead indicators, and, of course, the hottest charts today. $2.4 trillion. That's what's at stake into the OPEX this month. And, of course, it's creating some wild swings. On top of all of this, we also know that retail traders have been trading a hell of a lot into this. In fact, according to JP Morgan, which I shared over on our Twitter, follow us at FX Evolution, links in the description down below, retail splurged $3.9 billion on cash equities last week. NDX, S&P 500, and then, of course, Tesla, Apple, and Nvidia. $1.3 billion of inflows. This is a huge deal as we know there are transactions going on in very large quantities. In fact, over the last 24 hours, we saw a monster trade come in for IVW, which is basically a whole bunch of growth stocks such as Apple, Microsoft, Nvidia, and Google. Is this a sell or is it a buy? Based on the current price action and the size of the quantity, I think most of you in the comments section will be able to figure it out. But we'll have to see further price action to really define that. We talked about semiconductors getting a monster trade about 48 hours ago. Well, since then, we've got an island reversal. We'll talk about that later on today's video. And it looks like everyone's jumping into potentially treasuries. Many trades coming through on the defended area of this price. Between 100 and 103 seems to be pretty profitable, or at least buyers are there, it seems, for treasuries holding down the fort. Is it some kind of rocket ship getting ready to go? Probably not, but certainly defensives are happening. And we've got plenty of stocks that look like this. This is Google, and you can see that it has so many transactions at these highs. Again, distribution, potentially something going on here from Wall Street. So as we enter into earnings season and the most important earnings of 2023, we know that this week is getting closer to the end. However, next week, big names such as Microsoft, Apple, and many others are about to report. And we know that over the next 2 weeks, we'll get upwards of 80% of the S&P 500 equity cap actually reporting. August 7th, at that point, most of earnings is over. It's all about next week. You've got to subscribe. There's so many things we're going to need to be covering. ERP, is this important? Something that we're going to be talking about moving forward, I believe, this earnings season. And do remember, if you're a new time viewer to the show, we've covered this quite a few times. So watch back a few of the videos and you'll see us cover ERP in some detail. A lot of the big analysts are starting to say that we've just seen the best year-on-year effect for CPI. This is coming from BOFA, but I'm seeing it from JP Morgan. I'm seeing it from Goldman Sachs. A lot of them are predicting that there might be a little bit of a hiccup in the inflation story. Remember, inflation's never dropped in a rock like this. Generally, it drops, has a bounce, and then continues to fade off into the inflation target. That is, if everything goes well. We've never seen it go straight back down. Now, where are we? Well, this all makes sense to the time of the year, but maybe everyone's getting a little bit too excited about it actually being a drop. We don't necessarily know that, although semiconductors certainly gave a bearish signal over the last 24 hours with that big short open, and it continued through the day into the close. So we're here 2 to 3 months generally in pre-election cycles. I shared this again over on our Twitter, and 7 years of pre-election data show us a very different story, and more importantly, an incredible synergy with this year. Although the percentages have been higher, this synergy is one to really marvel at. What about managed money funds? Well, we're seeing a bit of a move here. In fact, it's actually been a drop. Now, I could guess that this is retail traders starting to realize that they don't need to use MMFs, and instead they can find other quality kind of assets. But we are seeing a drop here of MMFs. Now, there are some history correlations we can do on this, and I think we'll do it on our weekend video. So make sure to watch that as we go through. A couple of other bits of data. We talked about auto loan delinquencies. We'll be following those over the next couple of weeks. And let's jump into the options and take a look at all of the important stuff that's going on over the last 24 hours. Well, firstly, almost every optionable major trade was down. Only Rivian was up 3.9%, and then we also had like a small amount of moves on J&J after the earnings result. That was a weird one pre-market as well. A few people in our private community were talking about it, and it was down and up and down and up, and then it ended up moving 6.1% up. Healthcare looking amazing. One of our favorite picks on our weekend video this week. Staples also breaking out some nice trends. So a lot of unusual options activity. You can see here all the huge amounts. You got J&J doing a 6.46 times 90-day average. And more importantly, it was just huge amounts of options. You can see on the right-hand side, the puts and the call volume as well. And we scroll down, and for the first day in a while, we're underneath 60%. 42% puts, 58% calls. 44 million. So effectively a lot higher than the normal average of 39, but still so many calls. So the instant reaction when markets go down at the moment is not to buy the puts. It seems to be to buy the calls still. And that's that buy the dip philosophy that we've been now doing pretty much most of really March until now. Which have been the best sectors? Well, the 5-day looks so different to where it did at the start of the week. XLV, now the second best sector. XLP coming out of nowhere, and then utilities also back in the green. Semiconductors is now the worst. Gold has pulled back, which we expect, and we probably expect further pullbacks that we'll look at on the charts. And the last 24 hours, as we reported at the start of this video, was super extreme. Utilities, healthcare, energy, and basically staples all up at the top. Energy did well thanks to yields increasing. And then we saw utilities, healthcare, and staples. This is day 2, which is important because we actually haven't seen 2 or 3 day string on these defensives pretty much this entire run of the last month and a half. So if we get a day 3 of defensive moves, that generally means Wall Street has activated some kind of more significant sell, and we could be looking towards mean reversion at that point. Let's go over to the US 2-year. It's rising. No real surprise there. We're seeing the US 2-year rise a little bit. If it does accelerate, have your alerts above 5.1. If that happens, yeah, the markets are going to freak out because that means we're in the unknown territory of yields, and markets hate the unknown. They like what they understand. And of course, if you enter those periods, it could mean inflation is about to get worse and the market's starting to predict that. All sorts of things could start to happen. A TD9 on our favorite chart here, which is Magma. You can see if it closes this week like this, wow, there's a huge amount of shorters potentially that could be behind a candle like this if it does close. And if we go back to the daily, you'll notice here that we finally have a little bit of a turn on the smaller time frames. If we go to a 2-hour, you can see we've got a higher low, a higher high, and a lower low. And we move below that low there, which is around 1,097 of this particular index that we're making up here. The thing with this is that we're looking for mean reversion. That's only about 10% away. Mean reversion is the 20 moving average. You can see how much it hugs this on the way down and on the way up. And really, we should have already hit it. This is a fairly extended rally. So does it mean we're crashing? Not really. It just means that mean reversion should be starting around this time. And because we're in the weakest 2 to 3 months, theoretically, this could be the beginning if the market chooses to do so. Like a rug pull based on the amount of assets going in from retail, it's a pretty good time for them to do it. The skew index got crushed over the last couple of days and it's kind of had a small uptick. That's again not bad for the bears, which we've been mentioning, but it wasn't really the tail of every market selling. It was just the tail of technology and semiconductors. We see here the equal weighted market was actually pretty much flat on the day. So it was the big tech that's getting hit, and that's what reports next week. Massive, big technology stocks. Copper was also rejecting, which means demand destruction could be around. We've talked about that a lot. The VIX is kind of bumping along, but no real pull up from the VIX, so it's not like huge fear is in the market yet. And as we reported, we saw monster transactions go through the SQQQ, and lo and behold, it looks like they're probably pretty profitable at this point. So there was quite a lot of unusual volume into this week. And it looks like, yeah, as we suspected, a lot of these moves are starting to come through. What about the Qs? Well, in terms of central bank liquidity, still very far away. And as we know, we really should be going towards mean reversion at some point. Could this be the one? It's starting to look like it, based pretty much on semiconductors, which we'll look at very soon. Treasuries had a lot of inflow. 104 plus will be very important for treasuries to hold, let's say, a new upward trend. But at this stage, it's all about yield. So remember, if yields do spike past 5.1, don't expect treasuries to be like, yes, that's awesome. A lot of the people that are buying or selling treasuries here are doing it with a lot longer idea than maybe a day trader or a swing trader. So no swing activation, more of just a very interesting accumulation period, maybe by a bigger player. The same thing with the dollar. The dollar did spike back up, making it back to some moving averages. And we're kind of looking now probably to the dollar around 101.20, 101 to get into that drop base kind of period. Maybe a little bit more here in the dollar. And that's sending weakness into gold, one of our new favorite assets moving forward, I think. And you can see that gold rejected this supply, which is fine, no problems with that. And if we go back over to the 2 hour, we'll actually show that we've got a bit of a trend rejection. So again, here we took this low out. We're starting to see maybe a little recovery into a sell. 1950, so 1950 could be a pretty important level to see whether the bulls regain. But I could also see this market coming down a little bit further. And we'll do some more analysis on gold in our weekend video when I'm back at home, so I can make sure that these things are coming out in really high quality. I do apologize for the volume yesterday. Yes, it did sound terrible, the microphone, but don't worry. We'll always do it whenever we can. And I always want to make sure I bring you guys the best content I can, even if I'm not in the main office. Let's move over here to semiconductors, and you'll notice the island reversal up and then down. Big island reversal. That's what it is. And it's happening at all-time highs. We saw huge transaction volume come through. That was a big volume day, and it closed near the lows, which is pretty important. If we get another, sell-off here, it could create further selling. And really what we're looking for is probably a break underneath this price. So we're really looking for a sell underneath 146 kind of 50. It's going to be a big deal for it. And it really could mark an important point for these markets. Nvidia also sold off, though I don't think it's like hugely slapped yet. We're looking for around 15% down, then probably some buyers. And it needs to be fairly quick. So if we're going to get a meltdown, it needs to be really fast. And I know people think today was a meltdown. It's just taking back a couple of days. Really, it's nothing. We need to see a proper meltdown. Remember back in 2022 when we got these multiple days of melting? That's what a proper bear would do to the markets. And we have not seen that really all of 2023, except for that little period in March that was kind of freaking the market out for like 3-4 days. Let's talk about Tesla. What happened here? This led everything. We got earnings that were really good, but of course there's concerns now about the future. So what happens as a stock graduates to the next level, and now every economist is looking at it saying, oh, I'm not sure if they can keep this money, blah, blah, blah. I'm not here to speculate on all of that. It did look pretty good on the surface, but of course forward guidance is what they're looking at. It did take the lows that we talked about last video. So 300 was a monster mecca. Didn't quite get there, got to like 298, 299. Sold off 10%. That's a significant deal. I would expect relief rallies to come in for Tesla, but by breaking underneath this 265, we've technically changed trend, at least for a swing trader. So rallies could be met now by sell demand, and we know that hasn't worked once before. Over here on the left-hand side, there's the rally, but you were saved there a little bit by the fact the market literally gapped where you would have probably waited for the sell. So in this case, is this the double pump fake, or is this a double pump with a real movement? So hopefully it is, and this is probably the chart, or these are the two charts that I'm looking at most cleanly for that. Big momentum coming through staples, big momentum coming through healthcare, which was our favorite sector this week, and healthcare is trying to make a new break at a new high. If that continues up, it's Wall Street moving defensive, and if they're moving defensive, they tend to do it for a period of time. And if they're moving, and again, if that's happening, what is that telling us? Maybe it's time to get that mean reversion finally in these big tech stocks. Been waiting for this for a little while, and it seems like this is the right zone for the bears to do it at around the right timing. The ASX 200 for the Australian viewers, as we move into indices here, sold off a little bit above in these resistance zones. This is where the sellers are going to come in if they're happening, though it hasn't really been a brutal sell, and I think a lot of that's just because it's mostly tech and the Australian market doesn't hold a huge amount of tech. Same thing with the DAX. You know, you'd think this maybe would have sold off more based on the US, but it didn't because it wasn't anything other than tech sell-off. We saw that in the green screen at the beginning. It was red in certain areas, and the rest of it was just pretty much all green, all good. RSP, the equal weight, was doing pretty well. So is this the sell? Well, I would have suspected around here would have sold, went a little bit higher, didn't take the high off, need a new low on the DAX. So really the big point here is going to be 16,000. If I was guessing at this point, yes, I would probably think it's to the bear side based on the rejections. But yeah, I mean, the trend overall has been bullish. We're just working on that Wyckoff distribution and the fact that this has still got 2 rejection wicks. But if the bulls manage to close above here, whoa, new highs, I reckon, on this one. So, you know, very important zone leading into this week. What a big one. Let's move over to the US 30. The Dow doesn't seem to want to reject or do anything. It's very strong. It's back into, you know, this 30 kind of 35,400, 500 resistance, but nothing much to note there. NASDAQ looked a lot worse, put in a nice sell-off day, made a new low underneath 15,530, which we said was probably going to give us like a smaller time frame swing change of trend. So now it looks like rallies should be met by sell demand. And it was a pretty strong sell. I mean, it sold into the close. Let's have a look at the Qs just so we can see it again. And you'll notice here, the Qs almost on the close low. That means that, you know, they were pretty serious about the sell and they actually put in a good one. And this, again, with semiconductors makes me think, well, maybe it is real. Maybe this is the turn. S&P 500, another one, gap up, then gap down here. Pretty strong candle formation, certainly the type of thing that we are looking for in these markets. And then we move over to the US 500. This made a small change of trend, very small. I don't know if it's significant enough yet. I'm still waiting for 4,500 to actually be broken below. And as we know, coming into options expiration, there's a lot of fandangling that happens into these events. So often the Thursday is the more wild day, while the Friday kind of goes off and does more normality. So I think that's something to keep in mind here. This is options expiration. There's a lot at stake. There's a lot of rebalancing. And probably a lot of the stuff around was based on that rebalancing for the NASDAQ that's coming up. Bitcoin, no changes. Still stuck below and above. No breakout. We'll report back on the weekend on that. For news, there's nothing much coming out except for really a little bit more earnings. But really, it's all about next week, guys. So make sure to subscribe. I'm super pumped to find out what happens with the market next week. I always love a good earnings season. And I think there's going to be so much volume opportunity. So make sure to watch the channel. We've got so much coming your way. And thank you so much for supporting us. And again, sorry for the mic audio yesterday. But we try to bring you the content whenever we can. Thank you so much. Appreciate you all. Bye for now.